Let you know what's going on the real estate market today, 2/23/18. Interest rates are on the rise, so if you're looking to buy, your sense of urgency really has to be there. And rates, you still can get it at 4.35 right now if you have a 700 plus credit score. Credit scores under 700, you're at about 4.65, which is scary because a lot of people, they see there, they do the searches. You go to bankrate.com, some may come up, oh, I can get a 4%. You can if you have over a 700 credit score, you're putting 20% down. My go-to lenders that at a 640 credit score, they'll definitely be able to get you a loan. I even have some that'll get you a loan at a 600 credit score. It is insane. So I don't know why people are still renting in this market and they can afford to buy, but they think they can't. And that's part of the issue. A lot of people think they know something and they really don't know, but they don't seek the advice of the professionals that's in the field that really know, that help educate them that they don't know something what they think they know. Please keep this in mind. If you're putting less than 5% down and you have under a 700 credit score, your interest rate will be around the 4.65 and up. That's just a fact. That you're thinking of refinancing your house and you haven't yet, and you're waiting for rates to go down, I encourage you to call your lender right now, get your stuff already started, and get a quote to see where you're at. Otherwise, if you need a lender, contact me. Interest rates have been on the rise the last 5 consecutive weeks. A report from Redfin says a survey of 4,000 consumers reported that 6% of prospective home buyers will stop their home search. We do a buyer's consultation first. They have to want to buy a house more than I want them to buy a house. And there's a lot of looky-loo buyers that claim to be, but it's not really ready. 27% said it would slow their process, if not stop them to buy. Now that's scary once again, and it lets me know to the last fact. If you hire a real estate professional and you say you're a buyer, you have to want it more than that professional. Me, when you hire my company, we want to get you what you get. There's a lot of stuff that we do off market. We search for properties that are not on the market for sale by owners, expired listings, pre-foreclosures within the area you want to live, within the zip code, the square footage, the 1-story, 2-story. It's all really zeroed in on what you want. And we tackle those people to try to find you additional inventory that's not on the market. And that's what we bring to our buyers, but we only bring that if you hire us. And when I say hire us, that's sign our buyer broker agreement, hiring CLJ Realty Group to be your brokerage of choice to represent you as a buyer. 25% said it would have no impact. They're committed to the process. And that's what I'm talking about. That is who I want to work with, those 25% who's committed to the process no matter what interest rates do. They're tired of being a renter. They're ready to be a homeowner. They're ready to seek the American dream. I love it. That's really who we strive and work hard for. And those are the clients we want to represent because they're committed. They're going to do whatever it takes to become a homeowner. I love that. Goodness. The rest of the report, 21% said it would increase their urgency to buy. I like that as well because these are other people that's still serious. They're still looking to buy. They're not going to let nothing stop and get in their way to stop them from reaching the American dream. Their urgency is higher, and it should be. And I said if you were with the right real estate professional, your urgency probably should have hit a month ago. The last 21% said that increase would make them look in more affordable areas to buy a smaller home. When I think about that, that 21% is powerful because now it makes me think like what the feds are really doing. So I have another report here from a National Association of Realtors, the home sales for the West Coast region, January 2018. Check out these numbers. 0 to 100,000, negative 34.2%. Okay, don't know too many homes within that price range. Okay, sales from 100,000 to 250,000, negative 19%. Now, I still know areas within Southern California you can find a decent $250,000 home. It's insane that it's down negative 19%. I can say investors, or if you've owned your home for over 5 years, it's time to become an investor. That's where you need to attack the 100 to 250,000 price range right there. You need to look at attacking that. Okay, but let's keep going. 250,000 to 500,000, down 0.2%. Not really bad. We don't have to really shed too much in there. That's not bad. But now this is where the change is. 500,000 to 750,000, up 9.4%. That means a lot of people are moving up. They're doing good as far as their job, their savings, everything that's going on, their own personal situation, and they're the move-up buyer. Amazing. I like to see that. 750,000 to 1 million, up 8.2%. You got to think about that one. Something's going right for these people to keep moving up in that price range. And now here's the major shock. 1 million plus, up 15.4%. And most of that is courtesy to the Bay Area. The luxury market in the Bay Area is booming, dude. And going back to my notes, it just makes me think, why the interest rates are increasing. And now people are looking at the more cheaper houses because their payment's going to be higher. So if you're a buyer, you're on the fence, or you're in the market right now, with the way the interest rates are going, if you don't lock in an interest rate today, this weekend, next week, you're going to end up being in the fives, and that house you were going to purchase for $500,000, you're probably going to be knocked down to $480, just because your actual monthly payment is going to go up anywhere from $200 to $300, and it's going to hurt your purchasing power. So if you don't want your purchasing power to get hit, you got to get active now. You got to get with your lender. You got to get a rate locked in. But ultimately, you need your real estate professional on the ground, in the field, to find you other houses that's not on the market that match what you want. And then also, you have to want it as bad as your agent. You have to be in the know of what's going on. And you have to realize where you truly stand. But the refis in the low purchase market are up. So something's going on. Somebody educated the people that are homeowners in the low market, which explains why the 500,000 and 750 went up. Why the 750 to $1 million went up. Because people that are in the low purchase range right now, they're getting smart. They're gaining wealth by buying that smaller house first. Refinance loans saw more closings than any other mortgage loan in January, with refis representing 45% of all closed loans. High numbers, like the average refinance in the low market is generally 25% to 30% in any given month. That's usually the standard, but for January it was 45%. Now it just lets me know those people were actually watching interest rates, talking to their agents, talking to their lender, and really they know what's going on in the market, so they prepared themselves. They got a lower rate now because there's no telling when it's going back down. Let me finish this. 69% of all closed loans have FICO scores of over 700. It's crazy. Okay, 70% of purchase loans and 66% of refinances had FICO scores over 700. Okay, the average FHA purchase FICO score held steady at 680. Okay, and the FHA refinance FICO score held steady at 645. I love that. Okay, so like I said, I'll tell you, if you don't know much, if your FICO score is a 640, just about anybody will give you a loan. Stop trying to think, okay, I want the 700. I mean, it's good to have the 700, so don't let me say that. But if you want to buy, you have a family, you know you want to buy, you're ready to get in the market, you're ready to stop being a renter, stop acting like you know something when you really don't know. So I really, really want to stress this. I'm trying to turn more buyers into homeowners, more renters into homeowners. And by doing that, you need to get connected with a brokerage that is there for you, or a lender that knows what's going on, their post is on the market, and they're truly there to help. So if you have a 640 credit score, get with somebody today so you can figure out how much purchasing power you have and start looking for some property. Even if you have under a 600, there's still hope. You know, it may take some time, but there's still hope. Like, you're still in that space to where you think you know, but you don't know. So until you get with a mortgage broker, they'll run all your numbers. They'll tell you, okay, you know what? If you get up to a 620, I'll get you a house. If you get that 600, I'll get you qualified for a loan. You don't know until you get with that person. So I tell you, call somebody today or contact myself. I'll hook you up with the top mortgage broker in the area to help you and your family situation and help you stop being a renter and becoming a homeowner and reaching the ultimate American dream.